Hey guys, today we're talking about the depreciation deception. That's going to be the first thing we're talking about. But I've actually got COVID at the moment. So I'm going to tell you a little bit about what my experience of COVID has been like, and it's in amidst the big floods that are happening on the east coast of Australia. Now, you guys who've seen me do these videos in the past, that background there is usually blue water. But at the moment it's all brown water. So I'm going to share with you a little bit about what the experience has been like for us, mixed in with some of the depreciation tips I'm going to share with you to help you with your business. So let's rip in and hope I don't pass out. So guys, today we're looking at three things to do with depreciation. Firstly, we're going to do a quick recap on what depreciation is and how it affects your business. Secondly, we're going to look at why depreciation is actually a good thing, because if you don't understand it, it can sometimes be confusing for you. And the third thing we're going to look at is why depreciation is a bad thing. If you're a business owner who doesn't understand what it's doing to your books and your figures, it can be really disastrous. So we're going to check in on all those three things, and I'll tell you a little bit about my COVID experience and the floods here on the East Coast. G'day guys, my name's Brad Flynn and I'm the author of Find Your Cash and Find Your Ideal Employee. My channel is all about helping small business owners face the challenges of small business to find more money and find great people. Thanks for watching. There'll be some options you can check into later on to download some of my free stuff. If you like the channel, give it a thumbs up and you can subscribe down below. First up, I'll give you a little bit of experience what it's like to have COVID. You know, we've all heard about this all around the world. We're all dreading it, and we're all vaccinations and the rest of it. So I'm just going to give you 30 seconds on my experience, so that if you haven't had it, give you something to maybe give you a bit of a heads up. I found out about it Tuesday. I was feeling very fluey and yucky and sounding like this, and obviously that's the first thing I thought. So I had a rapid antigen test. It came back negative. The next day I still wasn't feeling good, so I went and had a PCR test, which is the more developed test. And then 24 hours later, I found out I was actually positive. So it's like having the flu. I sound like I've got it. There's been times when I've been really tired and had to lie down. My daughter's here with me at the moment. She's in isolation with me. She's got it as well. She was vomiting a lot last night. I thought I was getting better, went downhill again. But all in all, it's like having a bad flu. So if you get it, I wish you all the best. Some people get nothing from what I've heard. Friends and business owners and clients have had no problems with it. For me, I've been fairly run down. This is the first time in about 3 days I've felt like actually doing something, and even this is a bit of a push for me. So if you get it or you're worried about getting it, don't be too worried. It's not too bad if you've had all your vaccinations and everything. But you'll hear me go through and I'll tell you a bit more as we're going along. But let's get into the good stuff and talk about depreciation and the effect that it's going to have on your business. Now I'm going to make an interesting suggestion for you up front, and that is to keep 3 sets of books. Now you're probably thinking, Brad, why on earth would we keep 3 sets of books? Well, let me explain. The first set of books you want to keep is for the government. Okay, we are all obliged to pay our taxes and so forth as we go through our business to help our countries and so forth share for the common good, and the different things that we use are publicly reliable. So yes, we do need to pay tax. And in my small business financials course, I talk more about tax and asking questions to your accountants and so forth. So it's really important to don't like tax. Tax is a good thing, because if you've got to pay more tax, it means you're paying more money, okay? But the first set of books is we need to keep for the government. The second thing we need to keep is a set of books for our business in which we actually exclude depreciation, because I'm going to explain to you why depreciation affects what the government sees. But in the second set of books, we want to actually exclude depreciation because it muddies the water and deceives business owners about how they are actually doing with their business. And the third set of books you want to keep is, you know, as business owners, we do all throw in some expenses that may be a little bit borderline sometimes on whether they're business related or not. So that way you can get a full picture of what's going on with your business, not just some of the fancy stuff you're buying for yourself because you're a business owner and you can appreciate it, like cars and all those sorts of things. But that third set of books is about looking at those figures. So you have these 3 sets of books and it gives you a better overview of your whole business. So that's the first thing I want to say about depreciation and how it affects things. Now let's talk about depreciation. Now the word itself means to reduce in value, okay? It comes from Latin originally meaning depart, to take away from. So it's the opposite of appreciation, which means to increase in value. So if we depreciate something, we fundamentally decrease the value of it. Now this can be confusing for some business owners when they buy an asset and they think that that asset, the cost or the expense of that asset goes on to your profit and loss statement. No, it goes on to your assets, okay? And the government gives us a list of what we can write as assets and so forth, and I'll talk a little bit more about that in a minute. But an asset is something, it's got to do two things, okay? It's either something you own or something that is owed to you, okay? So an asset can be cash, it can be machinery and so forth, and then it's of course the money that people owe you. So they're all assets, okay? And they sit on the balance sheet separate to our profit and loss statement. When it comes to the end of the year, what our accountant will do is depreciate certain parts of our assets, our physical assets, okay? They will write them off in value. So as I said, you buy it and it goes onto your balance sheet as something you own. It has a dollar value. And what your accountant will do, and this is based on what the government says they are allowed to do in terms of the amount you can depreciate and the time frame you can depreciate, they will take a chunk of that value and put it as an expense on your P&L. So you will gradually add that asset to your P&L over the years to write down the value of it. So that write down in value is a cost of doing business, which is what your P&L is all about. It reflects how you've been running your business. If you've watched some of the other videos, this will start to make sense for you. So that's how it goes from being an asset. We buy it originally, it goes onto the balance sheet, not the profit and loss. And then when the accountant does your books, we take a portion of that asset expense and we put it into the profit and loss to actually depreciate what's going on. Now, we call that depreciation. We actually call it capitalizing when we've actually put it onto the balance sheet as opposed to expensing it. Now, you can, if you wanted to, put something like that straight onto your profit and loss statement. But the challenge is it becomes really confusing because if you buy something that's worth $50,000 and that hits your profit and loss in 1 year, it's going to make your figures look all weird and all over the place, okay? So it's not a good idea in terms of understanding how our business is running. So now with that in mind, and when we're looking at that first option as the set of books for the government, and we take a chunk of our assets and we write them off and add them to the expenses on our profit and loss, what do you think that does to the profit? And why is that important? Well, profit is what we pay our taxes on. So if we have lower profits, then we pay lower taxes. Exactly. So that's for the government's part. Now, this is where it gets a bit confusing for the business owner. So whilst depreciation is a good thing in that we pay less tax and we can write things off over time, and the government, we don't have to pay as much tax to the government. Now, you've got to pay tax, as I said before. The confusing part for business owners comes when you look at your financials that you get back from your accountant and they look horrible. You know, it might show you actually making losses and so forth. And as a business owner, this can be really confusing because if you've had a really good year in business and all of a sudden you're seeing a negative bottom line, you're kind of like, oh my God. That's why we keep the second set of books, because we leave the depreciation in there. Leave the depreciation on the balance sheet. That gives us a better indication of how we've been running the business as an entity by itself. Our business is there to take what we have with our assets, turn the assets through their use somehow into revenue, then into profit, and then we turn it into cash. If you watch some of my other videos, that will start to make a bit more sense. But it can be confusing if you're a business owner, if you don't understand what's going on, and that's why this video is so important. So hopefully that's helped clear up the depreciation deception for you in your business, you know, those 3 different sets of books. And it's just a matter of adding depreciation in or out in terms of what your personal stuff is and what your business stuff is. If you've got personal stuff that you've been depreciating, you want to leave that out as well completely because it confuses you on how effectively you're running your business. We want to maximize profit on our P&L legally with our business as we can. Then we do the depreciation that we give to the accountants, and then we can add in our other depreciation and bits and pieces so that we know how well we've been running the business. So if you've liked watching my video, Like it, subscribe it. Down below, you're going to see a link to my free small business for us, free small business owners financials course, which will go into the depreciation side of things, how to deal with your accountant. And you don't need to be a rocket scientist, but there's some certain important questions that you need to ask your accountant. So subscribe down below, give it a thumbs up. Thanks for watching. Hopefully this has been valuable for you. And if you've been thinking about COVID and it's not too bad, maybe you got some value out of it as well. Have a great day.